What's going on, Moon Gang? Moon Gang, happy Monday morning. We are back at it again, Daniel. And of course, we are always dumb money. What is this? A market for ants? Happy, what is it? November 15th, whether it's your morning, your afternoon, your evening, your night. So happy to be with you right now. I mean, it looks like we're going to have a very exciting week ahead of us. I am particularly excited for some of the moves and volatility that we're, I think, fairly expecting this week. As you can see, AMC already coming in right now, currently trading pre-market 40.52, GME trading at 203. Tesla is down, of course. It's the weekend. The weekend just concluded, which means Elon had to say some crazy stuff. We already got movement there. S&P 500 already gunning, it looks like, for a new all-time high. A lot of things going on. Crypto's hot. I tweeted out that I'm a hot tamale. You know who's the real hot tamale right now? It's crypto. Bitcoin looking good, Ethereum looking very good, Solana looking good, even SHIB waking up. Just a lot of movement. So as we're getting more, I guess, prepared for the day, getting our head screwed on right, let me give you the quick setup of what you need to know. So the Dow set to jump 100 points after breaking 5-week winning streak. First of all, why are we using the Dow? The Dow for many years has not been indicative of the overall stock market. I don't know. Is it just because the numbers are big? So it's fun to say, like, it's up 1,000 points, it's down 1,000 points. Like, it seems weird to me. The Dow is a poor representation of the overall market. We should be using things like the S&P 500, the biggest companies in the US, instead of the biggest 30. The Dow is a really weird metric for us to all use. But anyway, I don't want to go on a tangent on that. So what you need to know, S&P 500 this morning, it is gapping up. The all-time high from 2 Fridays ago was 470.65. It does appear as if we're going to be testing that today. So I'm looking for some strength. I'm judging on the pre-market. Let's see how this plays out, but we are within striking distance of an all-time high. And just so you know, over the past week, the S&P 500, it did drop 0.27%, but over the past month, it is up 7.4%. Really, actually, besides the last week, all the other major time frames are in the green. Right now, I'm looking for support in this region, the low 460s. We're looking for the test and the breakout to a new all-time high. Now, I know a lot of you are saying, whoa, Matt, that doesn't make sense. What are you talking about an all-time high? You're talking about like this month, right? Like this year, like this decade. I'm talking about all time. Like ever since they're like, hey, let's make this thing called the stock market and then sell backdoors to companies like Citadel. Ever since the dawn of time of this particular US-based stock market, all time. Now, a lot of you might be scratching your head and say, but hang on a second. Hang on just 1 second. Let's rewind all the way back to pre-COVID and say, we're up about 38%. Let's be nice. Before I get myself too mad, let's just call it 35 for easy math. Nah, let's be accurate. Let's call it 38. So we're up 38%. And this is, I'm not counting the COVID drop right here. I'm just saying right before the market got hit. So we're talking about February 2020. Now, I don't know about you, but a very fair question is, do you think our economy has grown by 38% ever since that moment? From February, pre-COVID sell-off, from that moment till now, are we actually up 38%? Has there been 38% growth, or is a majority of that 38% from inflation? I have my strong opinions that yes, it is because of inflation, but hey, to each their own on that one. The Qs, very, very similar to the S&P 500. This is more of the tech-heavy top 100 stocks. About 50% of them are tech. Same thing, a little bit of a gap up, not too far away from the all-time high. Russell 2000, small cap stocks. AMC happens to be the biggest one. Very similar shapes in all of these charts. The SPY, the Qs, IWM, all of them ever right before, the moment before the COVID sell-off in February of 2020. From then until now, all three of them have grown by a considerable amount. And apparently everything else is more expensive. In fact, I was just reading this morning that if you're in California, the average gasoline price is now $4.68 per gallon. That's the average for the state of California, which is actually breaking the previous record all the way back in 2012. Oil, it's taking a little bit of a breather right now. I can't be too it's taking a breather because there's more pressure on the government to tap into our own reserves. And now that there's mounting pressure from a political standpoint, we are seeing oil come down because obviously if we go into our own reserves, that increases supply, demand roughly staying the same. That should help the price go down. But just everything's expensive. Coffee's up, sugar's up, all forms of meat are up, energy, housing, everything is up. Even labor, hourly payments are up. The issue is hourly payments are not up by the same degree as everything else. So it's still a net loss per person, or at least in how far you feel like your $1 can go for you. And I'm going to get into this in a second when I have the details to show. But basically in the past 100 years, the value of the US dollar has dropped by about 91%. Once again, in the past 100 years, the value of a US dollar has dropped by about 91%. And what was the metric in May of 2021? 40% of all the money in the system had been created in the past year. So back in May, if you take May to May from 2020 to May of 2021, right there, that's 40% of the US money supply was created within that year, which is just, it kind of starts to add up when you're like, oh yeah, no, that makes sense why everything's being devalued so much. So how can you take this on though? I know I'm just spitting facts at you and it's like, well, okay, how should we interpret that? What could we do with that news? Well, right now we know that they've just started, as when I say they, I'm referring to the Federal Reserve, they just started their tapering. So they have been purchasing $120 billion a month of bonds, of corporate bonds, municipal bonds, treasury, all that stuff. And now they're tapering it by $15 billion a month. So 120 minus 15, then that minus 15. So November, they cut off $15 billion. December, they're cutting off another $15 billion. And that's going to bring us to roughly June, July of this upcoming year of 2022. And then we're expecting our first rate hike, most likely by the end of 2022, maybe the start of 2023, depending on how bad this inflation truly is and what they want to do with that. Obviously, that's something to really consider. But with all of this, what you need to know in terms of, I guess, your life, your P&L, your bank account, all that stuff is you got to know the situation. I don't want anyone to be scared about it. Like, just know what's going on. It's so much easier to play the game if you understand what's going on in the game besides just like pure hope. Like, remember, it doesn't matter the market, whether it's up, down, sideways, backwards. There's an opportunity to make money. You just have to better know the game that you're playing. So like, if you're worried about inflation, okay, you look for things that are inflationary hedges. If you think in the meantime, our government, basically Congress, and then also on top of that, the Federal Reserve are going to keep pushing the market higher and higher and higher. Okay, well, you stay in the market then. My point here is to, I guess to the best of my ability, because like I'm not beholden to some giant mainstream media like conglomerate. It's to express the truth of what's going on. I really don't, I guess I don't have that much weight. So when I'm stepping on toes, it doesn't really matter that much. But it's all about just trying to explain the situation opposed to like all the like the fancy lip service and two-faced speaking that we really get here. So yes, inflation, it's considerable right now. We're breaking records. The CPI came in last week. We hit a 30-year, we tied a 30-year record, or no, we broke a 30-year record. And then the producer price index actually tied like a 12-year record, something like that. But it's up, up, up. You just got to know the game. The more you know the game, the better your opportunity to be successful when playing that game. Retail earnings to reveal how consumers feel about economy inflation. So this is a little interesting. So we know this, the consumer price index, this was last week, 6.2%, the biggest inflation surge in 30 years. The day before this was Wednesday of last week. On Tuesday, we had the producer price index, that was 8.6%. And now we're going to get a little bit more of an idea. So on Tuesday, we're going to get the retail sales. Like, that's another government report that we get. But on top of it, we have very important companies, and we're going to get an idea of what retail is actually doing. For example, before the market opens, Walmart will be reporting. That's worthwhile to pay attention to, because is the average person buying more? Are they not buying more? And then on Wednesday, we have Target. So those are two in terms of what's the average retail person doing. Very, very interested in paying attention to that. In a certain way, you could also argue Lowe's, but that's a little bit different. So I'll be paying attention to those three. But on top of it, just for me in the tech world, of course, I'm paying attention to NVIDIA, which is after the market closes on Wednesday. And then also before the market opens on Thursday, we have Alibaba. Macy's is in there. Kohrs is in there. JD, Ross. Right now, it's a big retail week, which will be interesting for us because a lot of people are starting to talk more and more and more and more about this inflation thing. Well, now we're going to see, at least over the past fiscal quarter, how all these individual companies actually felt with it. I mean, Walmart, Home Depot, Target, Lowe's, NVIDIA, Alibaba, Macy's, JD, Kohl's. There's a lot there. Important ones, all worthwhile to pay attention to. All worthwhile to pay attention to. And I just think it's funny because it seems like something is brewing in the back end. And I'm not here to call for doomsday. I don't want to be an alarmist. I don't think it's ever really beneficial to be someone who's fear-mongering. It's just, hey, I like to know the situation in the game, so there's a better chance of me and all of us really to capitalize on it. But I like over the weekend, I honestly could not stop thinking about this. Fed says meme stock poses risks to financial stability. Now, I hope that my opinion, I hope I'm wrong. I really, really do. Because to me, it seems like not too different from 2008, 2009. So I was young back then. I had to actually like research some of the articles. I was a young lad. I was just in high school, but now that I've researched some of the articles and I've talked to some people who were a little bit more, I don't know, mature and adult-like during that time, to my understanding, when it came to 2008, 2009, it was always the classic, let's just blame people. And at that point, it seems as if they blamed in 2008, 2009, like lazy workers, immigrants, and even that time, I think teachers. That was the people who were like, this is why the system got messed up. It was because of you, and you. It wasn't because of Wall Street. It wasn't because of politicians. Of course, why would they ever take blame? And this time, if things do go south, if inflation, I know we're told it's transitory. I'm fully aware of that. Like, hey, no, it's just here for a little bit. Don't worry about it. And then in real time, you have Powell like literally changing the definition of transitory. He's like, yeah, no, it just means like as long as it's not here for the next like 14,000 years, we'll call that transitory. And then he's fascinated that people care about it. Like it was almost, he was taken aback. Like, he's like, I don't know why so many people are focused on the fact that I called it transitory. It's like, dude, what are you talking about? Like, for him to be that disconnected, and then of course Yellen's there like supporting him as well. It's just so frustrating, and it's not too different from specifically what got going with the apes and AMC and GME. Is just the average person just trying to get through their day. We're treated as if we're just so fucking stupid and there's no way we could possibly understand it. Like, that's always, it's that narcissistic, egotistical standpoint of like, no way could you possibly understand it. It's always going to be your fault when things go wrong. We never mess anything up. We have the fancy pedigrees for those fancy diplomas on our wall. Trust us. We're right. You're wrong. You don't know what you're talking about. Take a seat. And that just overall, like, that persona that permeates like through the fabric of like U.S. society, culture, and I'm assuming the rest of the world. Not that I can fairly comment on like other countries' society, culture, and economy, but like I'm sure it's somewhat representative. And once again, when they mess up, it's never ever taking blame. So I was sitting for hours this weekend, and that's why I said I was a hot tamale. I was sitting there. And seriously, this headline, Fed says meme stock poses risks to financial stability. This is insane. It's another example of them trying to push off the blame of saying, hey, we kind of told you it was these people in their sweatpants on their couch who just downloaded Robinhood. That is apparently the risks to the entire financial system. That's insane. Like, the balls on them to even say that, to be like, yeah, we're just gonna like clearly push it off. It's so incredibly infuriating. Anyway, I digress. Biden plans to sign $1 trillion infrastructure bill, names the coordinator. I believe it was the right here, Mitch, formerly the mayor of New Orleans, will be the one shepherding this $1 trillion. About $550 billion will be for like highways, EV charging stations, all that good stuff. So this, once again, is the infrastructure bill, but the spending bill, the whatever it's called, I think, what's it, like Building Back Better? I forget the exact name of it, but that is allegedly going to be voted on the House this week. That's the one that's 1.85 trillion. So two different things going on. Infra bill, spending bill. The infrastructure bill already passed. It's expected for Biden to be signing it. And then we have the Building Back Better spending bill that the House will be discussing allegedly this week. On the other point of the political front, before I get into the virtual meeting between the president of both the U.S. and the People's Republic of China, we also had this COP26, which was just many countries came together and they were discussing the climate, global warming, all that stuff. So one of the interesting things that came out of it is there's going to be a whole market now for like emission credits. So basically all these countries signed, and each credit is roughly representing like a ton of emissions, like literally like a ton, like a metric ton of emissions. So I thought that was kind of interesting. There's going to be a market that allows them to actively trade these emissions back and forth, like these emission credits. And all I could think is, man, I really hope that Citadel is not the market maker for this particular market, especially when it comes to them trading emission credits. So let's be on the lookout for that. Let's make sure that somehow for this like global effort to improve the world, that Citadel isn't swooping in saying, hey, we'll be the market maker. Don't worry about it. We'll do it out of the goodness out of our heart. We should definitely be paying attention to that one. Okay, so anyway, Taiwan may supplant tariff supply chain disruptions at Biden-Xi summit. So once again, they are meeting this evening. I think it's around 7:30, like East Coast time, if that like actually matters to you. So they're going to be talking about a lot of things. Obviously, supply chain, what's going on in Taiwan. Tensions are not the best. I was reading a little bit about it, and they're basically trying to make sure that tensions don't get worse. I believe the words that Bloomberg or New York Times used was they're attempting to set some guardrails so things don't get even worse. That's what's going on. It'll be interesting. Of course, they have to talk about supply chain. They have to talk about the environment. They have to talk about Taiwan. They have a lot of things to talk about. And the expectations are nothing besides the fact of let's cross our fingers and hope that things don't get worse. Apple sticking taxpayers with part of the bill for rollout of digital ID card. So this is interesting. This is actually very interesting. In the Wallet app, if you're an Apple user on your phone, like previously, if you've flown before, something like that, you can store the ticket there. You just open your wallet and you're like, hey, here's my boarding pass. Well, they're actually kind of getting rocking with that for your actual identification, such as your like whatever your state-based license. I think Georgia and Arizona are set to be the first states to offer driver's licenses in the Wallet app. But what's interesting about this is critics question such a relationship requiring taxpayer money that ultimately benefits Apple and its shareholders by making the company's devices more essential. So basically, this is crazy. It's what we've seen previously, where you almost have these companies who, what's that term? They socialize losses of if things go south, the government steps in. But if things go well, all the profits are privatized. So right here, Apple as a company and Apple shareholders will benefit from this, but taxpayers, especially if you live in these individual states, you're the ones helping it, I guess, go higher because some of your taxes are going to it, which is just insane. That's like just comical of like, okay, we're going to help it go higher and higher and higher. But hopefully you're in Apple, or really it's the big wigs at Apple that are really going to benefit from it. Kind of interesting, definitely worthwhile to pay attention to. On more of a lighter note, this is hilarious. So this morning we have Ryan Cohen tweeting, I have a small wee backwards. And then you have me commenting same. So that one was funny, interesting, always questionable. It just seems like all these CEOs and leaders of companies and board members and chairmen are kind of like, I don't know what's going on, what's in the water this particular month of the year, but all these rich, powerful people are going a little bit nutty lately. Like, and by a little bit nutty, I mean like squirrel shit nuts. It's insane. So yesterday, 2 days ago, Bernie Sanders tweeted out, "We must demand that the extremely wealthy pay their fair share, period." Elon, he must have been like warming up his thumbs because he was firing off some hot tweets once again. And this became like a whole debacle over the weekend. I keep forgetting that you're still alive, which is like, can you say that? I don't know what's going on with Elon versus the entire U.S. Senate, but wow. And then he followed up, "Want me to sell more stock, Bernie? Just say the word." Now, Michael Burry, actually, the guy from The Big Short who properly called the housing market crash, he came in and he said this is all just for show. Like, Burry's opinion of Musk is Musk knows that the stock is way overvalued. He doesn't necessarily need the cash. He just wants to sell stock to lock in some of these gains because he doesn't think that Tesla's valuation will be sustained. Well, I mean, that's every person's going to have their own opinion on it, but this is just, it's getting insane. Like these, I guess how people are interacting, the way people of power are interacting with each other. But on a completely different note, due to inflation, 420 has gone up by 69. Of course, his crowd's going to like that. And then this is what we were talking about before. Purchasing power of $100 over time. So in 1950, that was $100. Now we're down to $8.70. So in 70 years, $100 lost 91.3% of real value. Inflation is the most regressive tax of all, yet it is advocated by who claim to be progressive. I mean, that obviously could be debated right there. But if you happen to think, yes, the US dollar is losing value and I want to save some of my value, a lot of people, I think that brings up the legitimate argument of what is going on with crypto. For the longest time, people really thought of gold as the store of value, but then that got wonky with basically Nixon in the 70s, early 70s, when he's like, nah, we're going full fiat. We don't need this like gold standard anymore. That's silly. So for quite a while, that was always the general investing thesis, is if you're worried about inflation, just park your money in gold. And Bitcoin came onto the scene in 2009. I would say in 2016, 17, it really started to get like the attention of, I would say, the mainstream public. But now this time, with it being even higher and inflation being more serious, it's turning even more heads of people saying, Why would I stay in cash when I might be able to park my money somewhere else that could retain some sort of value and hopefully outpace inflation? So right here, I mean, a lot of people are paying attention to Bitcoin, aka digital gold. All-time high 69,000 currently. It's trading at 65,000 right now. I would not be surprised this week. I'll give myself 2 weeks, but I wouldn't be surprised if it happens this week if Bitcoin's at a new all-time high. Ethereum almost had a nice breakout. The all-time high of ETH is almost 4,900, trading at 4,700. Almost had this trend line breakout. Solana's waking up. Even Sheeb's waking up. A lot of crypto is waking up. Now, some of this movement with BTC involves Taproot. Taproot, Bitcoin's long-anticipated upgrade, has activated. So just what's the skinny on this? Taproot, the long-anticipated Bitcoin upgrade, was just activated over the weekend, opening the door for developers to integrate new features that will improve privacy, scalability, and security of the network. That's your takeaway of what you really need to know, unless you want to get into the weeds of this technology, but it's better privacy, scalability, and security for the network. What you want to know, like for those of you who are like, no, hang on, give me a little bit more of the minutia there, what's going on. So it's all about the signatures. So previously the cryptographic, and that's going to be the security of it, the mathematical model of like how we know it's really not going to get hacked or anything like that. It all comes down to these signatures. It's been using an ECDSA for its digital signature, but now they're upgrading to the Schnorr, however you would say that. This was first recommended back in 2018 by Greg Maxwell, finally just got implemented, and Taproot upgrades to a different scheme called the Schnorr. Every transaction using Taproot will now use this new digital signature scheme, adding new capabilities designed to boost the privacy, security, and scale of Bitcoin transactions. It's linear, they're smaller, it's just a better technology is really what you need to know. Scalability, privacy are the main things, and then as always, security. Speaking of other crypto stuff, this is kind of fun. Barbados to become the first sovereign nation with an embassy in the metaverse. So I don't know if anyone from Barbados is listening right now, but congratulations. That's just fun. First one, we're getting these digital embassies. I like it. I like the sound of it, and I would not be surprised if people will be following suit with that one. Like just all these other countries are like, hey, we want an embassy in the metaverse too. So just a little bit of an update on that for you. We went over all of Elon and Ryan Cohen's things. And now finally, let's talk about AMC and GME. Just so you know, to start the day off, AMC has an estimated short interest of 16.44%, utilization of 82%, shares on loan of 94 million. In terms of GME, the estimated short interest is 8.72%, utilization 31%, and shares on loan of 6.3 million. GME's shares on loan have been out now for over 2 months, 63 days. This is probably the highest we've seen it all year. And AMC's shares on loan have been out for 75 days. Just trying to give you the breakdown there of what's going on. Today, I'm interested in what the overall market does. Are we going to hit a new all-time high? Of course, AMC, GME, AMC, I want it to hold 40. Would love to see that break out about 41, the high 41s, basically 42, and GME retaking 212-ish, 215-ish would be great. But I also want to pay attention to Tesla today. Not just because of Elon's tweets, but basically last week, we now have the information that he sold about $7 billion worth of Tesla stock, and it seems like he's trying to sell more. So I'm just curious if it's going to be able to hold on to $1,000 or not. Tesla, it is gapping down by about $15, 1.5%. But I'm very curious about how the public's going to react to this, and just like the obvious notion that the CEO is offloading some of his stock. So we're going to find out the answer to that in less than 5 minutes. So that is the wrap up I have for you, or I shouldn't say wrap up. Yeah, I guess it's the wrap up, and the wrap up of the rundown of being dumb money. That's what we're dealing with today. Those are all the movers and the makers. So let me turn this back to you and get to some of your questions before that bell goes ding, ding, ding. Hang on. Why is this not loading? We're having some tech issues. Going to the Moon song. There's 2 songs there. To the Moon is one of them, and that's by the Grillionaires, and the other one by the Grillionaires is Show Me the Money. Spider-Man trailer drops tomorrow night. If it has all 3 generations of Spider-Man, I think ticket sales will go wild. So on Sony, let's check out that chart. Sony is actually a pretty solid looking chart. I mean, it's high, but also your risk isn't too far away. If you want to be conservative with it, you could risk 121, so only a couple bucks. But I also don't, I mean, Sony is a $152 billion company. An individual successful or non-successful movie probably wouldn't move the needle on it. I mean, it's a giant company. I don't see an individual movie like really impacting it to like a notable degree. I mean, some of our best movies ever are $2 billion. Either Avatar or the one Avengers movie are $2 billion. And then by the time you're looking at profits and all of that, I don't know what the best Spider-Man movie is, but you have to also like just compare it to how big is Sony. I tried to tell you about Shiba Inu early on. Digital lottery tickets, sweet. We're the government and we're here to help. Finding this Wyckoff theory stuff super interesting from a game theory perspective. Thoughts? And speaking of squirrel shit nuts, where's Brendan? So I don't think Wyckoff, my understanding of Wyckoff doesn't really relate to game theory. I mean, Wyckoff, to every time like I've read it and used it, it's all about accumulation and distribution, not game theory. I would need a little bit more of a breakdown on that, Drake, of what you're referring to. Thoughts on Shiba Lite? It's a Litecoin to Shiba Inu. Its coin market cap seems to have big potential. I have no thoughts on it. My first question would be like, why is it different? What's different about Shiba versus Shiba Lite? Like, why would people switch over to that one? I think they got people to switch from Doge to Shiba just because it had a more built out ecosystem that excited people. So when it comes to a new project, just because it's new and it's cheap doesn't mean that it's good. What sets it apart? I have a thick Kohrs. Elon is planning on selling more Tesla. Seems like it. Definitely seems like it. Suzanne, shout out. What do you think about federal in motion? Something is brewing. Wait, federal. Oh, with the Marinara plays. So Mr. Boulay, we would have to be patient and just see if it continues today. We could pay attention to Tilray, SDL, all that stuff. We know that there's been a little bit of movement from the federal government of what's going on with Marinara legalization. I believe, who was it? Elizabeth Warren wrote to Joe Biden to basically pardon and expunge everyone for anything related to a Marinara charge. So that could get some excitement, but we have to pay attention to the bills and the committees they're in and that whole thing of like how a bill becomes a law. We'll just have to end up tracking that. So we're getting some early on baby steps. It could be better, it could be worse, but hey, it's better than nothing, I suppose. All right, we are waiting. Ding, ding, ding. The casino is open. All right. So this isn't necessarily a widely held rule by many people, but it's a rule that's helped me become a more profitable trader, a more calm, cool, collected, relaxed trader, especially on Mondays. I very much like to wait those first 15, 20, 30 minutes and just see what kind of trends are being built. Like, I don't want to get whipsawed like right in that morning volatility. And I also very much don't think there is an edge to creating an options position right out of the gate because generically volatility is too high. I have no issue with getting out of an options position. Sometimes that's actually advantageous. But to get into one, unless like volatility continues to increase and price continues to go in your favor, you're probably just overpaying on premium. What do you think about Volvo Car B? I don't know anything about Volvo Car B. I'd have to look that up. Let me give that a quick search. Volvo Car B. What do we have? Volvo Cars surged in trading debut after a 2.3 billion IPO. Volvo Cars gives itself an $8 billion price tag and cuts IPO size. Interesting. So just another automaker play, I suppose. Right now, the one that's been stealing everyone's attention is Rivian. Rivian's still hanging out in the range of $130, which is definitely noteworthy. Rivian more valuable than Ford, more valuable than GM. Rivian, I am surprised how much it's holding. Very much surprised. I mean, people are just excited about Rivian. Actually, let's see how Rivian is doing right here. Rivian at 131. What's the all-time high on Rivian? The all-time high is 135. Small gap below it, but still cruising. Remember, IPO'd at 78, opened up at 106, currently trading at 129. People are very excited about the future of EVs, specifically Rivian. Lucid trading at 46. Lucid to me is a very obvious gap fill play up to 56. I am not a financial advisor. I'm not telling you to buy. I'm not telling you to sell. I just think there's a statistical edge, an advantage to playing Lucid all the way up to 56, and maybe you'll get lucky, push even more. But Lucid LCID is a very strong looking chart. And right now, you could just risk 39.40. So you could risk about $5-6 and make maybe 11. So that's a 2-to-1, a 3-to-1 setup. Right there, the risk is well defined, the reward is well defined. You just have to ask yourself, okay, do you like whatever the perceived odds of the situation is? Maybe you don't want to play that. Obviously, if you play options, you're making it a little bit more complicated because you're saying, okay, not only do I believe in 56, but you believe in 56 in a certain amount of time. So that does obviously complicate it a little bit. If you want to still play that, you could always play something like a credit put spread. You could sell the 38s and buy the 35s. You could play that the same way. That would still be a bullish bet. There's various ways to play it, but overall, I'm personally bullish on Lucid. Definitely bullish on Lucid. I see some people talking about SNDL. This will be more interesting to me if it can get above Friday's high, so please alert me to that. If we basically get to 96 cents, I would want to see, I don't want an inside day. So when I say an inside day, it's when the candle, the bar that we're currently dealing with, is perfectly inside the previous bar. That's an inside day. Inside days, statistically, they're actually a bit more rare than any of the other chart setups. But with it, beyond the fact that they're kind of rare, there's just no direction to it. You can't see a trend. The bulls aren't winning. The bears aren't winning. It's a neutral day. So let me know if it gets above 96 or below 80. And let's see if we can see some trend being established. All right. SPY trying to make up its mind. Q trying to make up its mind. IWM going a little bit red. What else do we have? Is Rivian on the move? Rivian a little bit red. How is DraftKings looking? DKNG maybe, hopefully starting a bounce back. Penn still low ever since its earnings hit there. What else do we have? What else is moving? What else is making some swings? Loop Ring strong. Cardano hanging out above 2. Unfortunately, Cardano hasn't moved in a bit. Solana looking strong. Prague back above 3. Would love to see Prague holding 350. All right. Sweet. Good setup for the day. Let's see how things start to play out. What's your opinion about option straddles? I mean, if you know what a straddle is and the appropriate moments to use them, it definitely can help you make money. I'm not it's not like I'm trading straddles every single week, but I'll commonly trade straddles, strangles. I think some of those, I don't want to make it seem overly complicated and say more advanced strategies. I mean, I guess technically they are because you're dealing with two options as a singular position. But don't let that scare you away. I think if you're listening right now and you give it the time, you can definitely understand what is or isn't going on with those. I don't want people to think that it's far too complicated for them to understand. It just takes time. People like to throw out these terms and overstate the difficulty of various things to make themselves feel better. When it comes to options, Is there a steep learning curve? Yes. Are you capable of overcoming that learning curve? Also, yes. Check out MULN, EV Play, ER tomorrow, low float, debuting SUV at LA Auto Show. MULN. Super, like, not only a low float, but also crazy low volume. It doesn't trade too much. It's a $13 stock that trades 2 million shares. Seems pretty low to me. Like, I like to trade stocks that are more liquid. AMC is having a great day. AMC currently up 2.75%. We're looking for that breakout. Let's just basically call it 42. All right. Cool. Love listening daily, brother. AMC to the moon. DWAC. How is DWAC looking? The shell company of a shell company. Interesting. DWAC is up 2.6%, hanging out at 61. I'm still surprised it hasn't gap filled down to 52. I still think that's in the cards for DWAC. Matt, what is your overall opinion on the market? Kenny G says frothy. M. Burry says largest bubble of all time. Thoughts. So my thoughts on the market right now, and remember, I'm a 27-year-old. I've traded for about a decade. I started trading when I was actually a little younger than 17, so it's been over a decade. I would say I've been taking it as like a serious like aspect of my life now for like 3 or 4 years, but I've been trading for over a decade. There have been people who have been trading for 4 or 5 decades. So I'm just trying to get everyone to understand that I'm not the end all be all commentary on the market. So not some like master trader that everything I say is 100% accurate. These are just my own thoughts. Sometimes I'm right, sometimes I'm wrong. With this, my opinion is, in the short term, I'm going to remain bullish, but I'm going to remain bullish on my toes. I want to make sure that when things, because I think when they turn, they're going to turn rapidly. So I'm watching it every single day, bullish. And when I see things start to bend over, that's when I'm like, okay, maybe it's time to lock in some of these long-term gains. Maybe it's time to start to position myself to take advantage of a potential market correction. Like I said before, I'm in no way trying to fearmonger, call for doomsday, anything like that. Right now, I am long on the market. I do have exposure, bullish exposure to the overall market, and I'm going to remain that way till the chart tells me to switch. I'm not just going to arbitrarily be sitting here saying, hey, correction, because that's how a lot of these trading gurus do it. If you keep saying the exact same thing over and over again, eventually you're going to be right. That, like, no one calls these people on their bullshit. They're like, hey, correction. Well, anyone can do that. If you sit here and you say market correction every single day, eventually one of those days you're going to be right. So these people who put out those types of predictions, is there any utility in it when you're not giving a time frame? For me, I watch it day in and day out. From a seasonal perspective, I'm pretty much from this point, once we get over the hump of Thanksgiving, there is a seasonal, I guess, downtrend right around Thanksgiving. But when we get on the other side of Thanksgiving, from then until about the first week of January, it's seasonally pretty bullish. And as long as like the Fed doesn't kick in the door like the Kool-Aid man and say, yo, we're raising interest rates now, and that whole tapering thing, well, we're going to zero next month. As long as they don't do something like insanely wild, I think seasonality will prevail. But with that, I also understand that things are a little bit, what did you say that Kenny G said? Frothy? I honestly think, yeah, okay, frothy is a good adjective for this scenario, which is why I'm mentally prepared for making a shift when I need to. I'm not just going to blindly be bullish for the next half year. Casper, CSPR, what's happening? Your thoughts, P? I think Casper, it was announced a buyout. They were purchased, I believe, for $300 million, which is kind of weird because previously they've raised $350 million. So you're like, where'd that extra $50 million go? But I believe they have earnings tomorrow, and I think it was announced that they were being acquired. Casper News. To be taken private by PE firm. Yeah, so Casper's being bought out. Casper, like the mattress company. All right, Prague having a good day, up 9%. Tesla down 2.5%. Once again, the line in the sand on Tesla is pretty obvious. It's $1,000. That's a key psychological level. I'm curious, will demand be there or not? GameStop, very low volume. This has been the trend for the past 2 weeks on GME. We need excitement to return to GameStop. I still have my GameStop. I'm not touching it. I'm just saying, hey, the volume's obviously low. AMC is looking to have thus far a very good day. Would love to see that breakout and hold of 42. Any idea what made Matic drop so much recently? I think it was because it's run so much. It seemed invincible for a while. I mean, things aren't, as much as like we want it to be, things aren't always green. When you run quite a bit, it's natural to take some sort of breather. That is I would argue, a natural cadence of a market cycle. Consolidation, expansion. There just isn't enough money in the system, or especially an individual crypto equity ETF, to sustain a move continually higher and higher and higher. I don't know how many of you are like actively paying attention to AMC Twitter, but I need to make something explicitly clear. There was a well-known person on AMC Twitter who is saying that buying the dip is similar. It's like this, he actually said, is the same as selling short. I want to make this explicitly clear. That is 100% verifiably wrong. Buying the dip is not in any way similar to selling short. I don't know why someone would say that. That is a person who does not know about the market. This is not an opinionated thing of like, oh, I could see it this way, I could see it that way. That's actually just factually wrong. There are certain points in time, especially when you're talking about the market, where it's not an opinion. It's very much of like, no, these are rules of supply and demand. I'm not going to call a person out directly by their name because I don't know the point in that. And it doesn't need to be a bigger thing than it is. But you could take this to the bank. Buying a dip, going long on the stock when it's dipping, is in no way similar. In fact, it's the opposite of selling short. I need to make that so freaking crystal clear to all of you. Okay? Please understand that. This is not an opinion. This is fact. Do you sell when the RSI falls to levels of the start of a bull run? No, because RSI, it depends on when so RSI, the way it's calculated, the relative strength index, here, I could throw it up just so everyone can see it. Right here, RSI, relative strength index. Let me change the colors just so it's a little bit more visible. RSI, we'll do this one, we'll do this one, we'll do this one, and this. Okay, so RSI is over here on the left. RSI is referred to as like a momentum oscillator. I just want to make this a little bit bigger so everyone can see it. And all right, I think this is probably the most visible. So right here, I threw up the RSI. RSI, relative strength index, it's one of the most common technical indicators in the entire market. Many stock market traders, investors, participants use the RSI. What it is, it's a technical indicator referred to as a momentum oscillator. It goes up, it goes down. It has values of 0 to 100. Anything above 70 to 100 is considered to be extremely bullish, and anything below 30 down to 0 is considered to be extremely bearish. And when you get into these extremes, above the red, below the green, it's common to think that like, hey, you need to take some sort of breather. So right here, when you get into this extremely bullish territory, like we were at 935 on the 1 minute chart for AMC, it's also considered to be overbought. So extremely bullish, overbought. Extremely oversold is considered to be extremely bearish, and that would be below this green on the bottom. So just for those of you who care a little bit more about the math of it, most of the time, what you're doing to calculate RSI is you're looking at the previous X amount of bars. Most of the time it's either 10, 14, or 21. I believe that 14 is more common than 10 or 21, but obviously you could set it to taking into account how many of the previous bars you want to. So that's why it's different from the minute chart to the 5-minute chart to the daily to the weekly to the monthly, because you're taking into account the past 5 minutes, the past 20, whatever. Like it's X amount of bars. It doesn't really, so it depends the time frame you're on, because you're always taking into account how many of those previous bars there actually were. And when you're looking at it, you're looking at the range and also the, like, was it green or not? Like how green or how red was it? Is it speeding up? Is the velocity getting more, or is it not? Like, is the range kind of not important at all? So that's the calculation. If you want to know the exact details, I have previously done a video on it. If you just search like Matt Kohrs RSI explanation, I go over the exact math that's basing it. But what you need to know is it takes into account the most previous, how many ever bars, and it goes higher and higher the more green you are, and it'll go faster if the bars are even bigger, and then the opposite for red. But the way people look at this is sometimes day traders, swing traders, depending on your time frame, when it gets very high, that's when they look to lock in their gains, because they're saying, hey, I think there could be a reversion to the downside soon, or the exact opposite on the bottom. When it gets very, very low, they're like, hey, I think there's going to be a reversion to the upside. This might be a good time to buy. There are various trading strategies involving RSI. That's just one of them, a very common one. All right. No need to get all sexy, thick set about it, thicky. Sexy, thick set about it, thicky. Is that what you meant to say, Brendan? Also, you don't pay capital gains until you withdraw. Yes, that was another piece of false information. I am not a tax person. I am not a CPA. Whenever it comes to taxes, please get advice and from a professional. In my own experience, you pay on your net gains, or you could write off a portion of your net losses when the trade is locked in. It doesn't have to be removed from your brokerage account. For example, if you buy a stock at $10, you sell it at $12, and you leave that $12 in your account, as in your brokerage account, you still pay tax on that $2 gain. It doesn't have to go from your brokerage to your bank account. That's not the taxable event. The taxable event is you closing a position. It doesn't matter where the money sits. That's been my own experience, but please, whenever it comes to taxes, please speak with a professional. People very excited about SNDL. Almost at 96, almost breaking out of Friday's high. Will Elon selling be a positive catalyst? I don't think so. No. Obviously, selling is selling. That pushes the stock down. And also, it's done in a very weird public manner where he's almost fighting with many senators, or he's fighting with 2 more senators than he should be fighting with, because he's fighting with 2 senators. And I just don't know how that would be perceived as a good thing. Hey, Matt, what do you think about ASAN light volume, but it's steadily creating a new 52-week high? I don't really enjoy trading things that have light volume. What is this? Package software. It just tells me that the public's not really interested in it. It's trading 2 million. Like, it's okay, but not only is it light volume, it's at an all-time high. I don't have much success purchasing things at an all-time high. It increases the chance of being a bag holder. My opinion on this is trade like a sniper. Wait for your opportunities. Don't just get in because things are ripping. Like I said, like your risk reward breakdown, it gets untenable. It gets out of hand if you're always buying the rips of things. If anything, you would want it, be like, okay, this is interesting to me. And then you wait, just like a sniper. You wait. And then all of a sudden you see some demand coming back in, like in early October. This is your opportunity, not when it's at a high. Like, what if this is the high as it goes and it just sells off there? Your first question whenever looking at something is not how much money can I make if it goes right. Your question should be, if it goes wrong, how wrong is wrong? Like, can you withstand it? And right here, I guess your risk, like, that seems far to me. You're risking about $15, and I don't even know what the reward is. People are talking about LRC. Huge candles. LRC, I think when this thing gets going above $3.25, $3.50, we could get another move. Is the taxable gain balanced with my losses also? Yes. So that's, at least in my experience, like once again, when I'm speaking out these things, it is not professional advice. This is mine own. In my example, if you made $2 and then on another trade you lost $2, you would be net neutral. It's not like you're only playing on gains. You're paying on the net difference of your account at the end of the year. So overall, if you're a profitable trader, you're going to pay taxes on that. And overall, if you're not a profitable trader, you're able to write off to a certain amount. I believe on current U.S. tax code, you can write up to off to $3,000 a year off your income from trading losses. But once again, that stuff is always changing. Please speak to someone who knows more about it than I do. If a recession were to occur again, would it be better to sell some stock and have liquid cash or keep it in the market and ride the wave? It depends on what kind of trader you are. If you're confident in your ability to do that and like stick to your plan, well, yeah, it'd be better because you could buy more for less. But sometimes people miss it. Like, what if you sell off and the recession doesn't come and it just keeps ripping and ripping and ripping? It's definitely a double-edged sword situation that you have to consider. Sometimes I'll keep my positions and then I hedge it through the options market. So if even right now, for example, I'm bearish on Tesla, but I'm not going to get out of my Tesla shares. I own a decent amount of Tesla and I'm going to hold it. So to hedge my portfolio in the short term, I have an appropriate amount of puts where I should be net neutral, but I'm actually a little bit more, I'm actually net negative, or like I'm net short on it when you take into account my long shares and also my long puts. So that's how I do it. When it comes to my long-term account, I really don't like messing with it. So I don't want to sell. I want to hold it and I want to hold it and I want to hold it. So if I'm worried or if I feel confident about some sort of correction, that's when I personally look to the options market, but that's not necessarily a strategy for everyone. Prague looking good. What else is happening? BGFV down 9%. Prague up 10%. Tesla's coming down. AMC's hanging out at 40.76. GME is at 203. How's the SPY looking? Trying to get a bounce going. What are your thoughts and price predictions on Decentraland and UFO gaming? My thoughts are I'm bullish, but I have no price prediction on either of those. I don't know what UFO gaming is. I know what Decentraland is, though. What is AMC on TradingView filtered on crypto? Is this really a short tool for hedgies? What do you think, tinfoil hat? I don't know what you're talking about. What is AMC on TradingView? AMC on TradingView is AMC Entertainment Holdings. Is it really a short tool for hedgies? Filtered on crypto. AMC filtered on crypto? Oh, this is, okay, that the coin. Is it a short tool? No, that's a derivative. A short tool for AMC is when people short AMC. You seem so serious today. You okay? What's going on with you? Your thickness has withered to the point where you seem mostly like a floating head. I don't feel like I feel serious today. I bought BBIG at 11 and I'm holding my bag. Should I go ahead and sell or keep holding with my fingers crossed any chance it comes back? I mean, when it comes to the market, anything can happen on any given day. And like, my guess is as good as yours. I'm here to say, what was your trading plan? You got in at 11, which means you were chasing, but what was your risk point? I guess because I have no ability to tell the future or be clairvoyant, I can't tell you how things are going to go in the future. I can't say this is the great time to get in, great time to get out. All I can do is give commentary on like, okay, did you have a reasonable risk reward? It seems like you got in chasing and then didn't have a risk and let it go down like $7, which is that's quite a percentage sell-off if you got in at 11. So with this, my only commentary on it, can it come back? Yeah, of course it could. Like, it's a company. Companies improve and they can swing, or obviously on the flip side of that coin, it could get worse and continue to fall. Both of those are capable of occurring. My commentary to you is, what was your trading plan from the start? Before you create any position, it doesn't matter if it's stocks, options, futures, crypto, any of that. You got to know your plan beforehand. What are you risking? How bad do things need to get for you to pull that ripcord? You shouldn't create a position and then ask yourself that. I beg of all of you, just have a trading plan. And then as you create more and more trading plans with more and more trades, you're going to start to realize, hang on, like, this type seems to work for me and this type doesn't. I'm not going to say there's a certain type that works for everyone, because we all have different financial situations. We all have different personalities, which means we have a different risk tolerance. We all have a different trading/investing horizon. There is not one trading methodology that works for every person listening right now. You have to find what works for you. And in a way to find what works for you, you have to start creating your own trading plans and write them down. Like, get yourself a book, write them down, put it in an Excel sheet. If you want to be serious about this beyond just like diamond handing AMC and GME, if you want to help your own financial situation from trading or investing, you need to be very serious about it. It takes a lot of time. It takes a lot of time. It takes a lot of dedication, and just arbitrarily buying, that's not going to do it for you. You might get lucky here and there just because of randomness, but develop a trading methodology, track it, look for the patterns. What works, what doesn't work, the things that do work, double down on that. Trading plan, YOLO, all or nothing. Hey, if that's your plan, that's your plan. I hope it works out for you. Do you know when BBIG's earnings call is? If you Google it, it says November 22nd, but it has an earnings call icon on TOS for today after close. I do not know BBIG. I haven't been Brambles. I've been like watching the chart, but I haven't been like actively tracking the fundamentals of that one. This meme stock craze has caused everyone to think that anything stock market related is meant to cause their downfall. Meme stocks are 0.01% of the stock market overall. Yeah, I mean, the meme stock, like as media would refer to it, the meme stock. But basically, the story of GameStop, the story of AMC has brought a lot of people into the market. And I like that. I think more people should be involved in the market, because there are many, many countless studies saying the earlier you get involved in the market, the better off your financial situation in the long run, especially for people who are just long-term investors. But with every pro, there's always a yin and yang to it. With every pro, there is a con. And people who are particularly brought into the market with AMC and GME do tend to think that anything that happens is related to AMC and GME. And more importantly than that, they think that the types of moves we've seen in AMC and GME are commonplace. By definition, GameStop is a black swan event. It is something like GameStop has literally never happened before. Do stocks short squeeze? Yeah. But are they as common as like Twitter, Reddit, and YouTube would have you believe? Absolutely not. So that's something I think we all really need to internalize, is like, is it capable? Yeah. Is it fun when it happens? Can you make a lot of money when it happens? Of course. But it's not something that happens day in and day out. Where can I buy LRC? Coinbase won't let me deposit. I don't know. That's where I have mine, is on Coinbase. I don't know of another place to get Loopring. I'm curious why you can't deposit. Is that like a Plaid issue? Like it's just not connecting to your account? What am I doing with DWAC puts? I don't have DWAC puts right now. What time does Biden sign the infrastructure bill? I don't think there's a set time. It might not even be signed today. I think for him, what they're doing today strongly relates to like the virtual summit with Xi Jinping, the president of China. Does anyone have updates about Mark Kohrs? I mean, I speak with Mark Kohrs, but what type of updates? Are gas fees high on loopring? No, that's actually one of the advantages of loopring. Previous BTC having showed 2 to 3 years bullish, 1 to 2 bearish. Do you think it'll repeat? What if China and India start investing more in crypto? I think we'll report, but not to the same length of that bearish cycle. I do think at some point in the next 12 months, crypto will probably start getting into some sort of a downtrend, but I need to be clear about this. I think there's more room to the upside before that occurs. I think we go up, up, up. We take a downturn. I don't think it'll be as extreme as 2017. I don't think it's going to be that extreme. For me, I'm just riding like a roller coaster. It's going to be fun all the way up. And then I'm going to be screaming like I'm on a roller coaster on all the way down. And I'm just hoping to have free capital when I feel like the bottom's in to buy more. Speaking of that, I do need to check. So I switched almost everything out of Webull into public. And in doing so, I'm running into the weirdest technical issue where I'm switching out. So now the account value is like extremely low, like below pattern day trading. And from the switch out, I'm getting margin called on this account that has like nothing in it. I probably need to speak to someone at Webull to see like what the hell's going on. I'm so confused. But even, I don't know. The transfer has been such a nightmare. I'm happy that I'm in a brokerage that I like more right now. But man, this transfer out has been such a pain in the ass. What percentage of my portfolio is AMC and GME? Does it give me that breakdown? I might be able to tell you like the exact numbers. I think they give you a breakdown on public. I think you could do it. Hang on. Let me see if I can give you the percentage breakdown. How do you see? It says I guess off the top of my head, it's about roughly, I'm trying to do some quick math. So my public account, just that, because I still have other accounts. So just this one, AMC is about 55%, GME is about 30%, and then the leftover 15-ish is just other random things like Prague, DraftKings. Right now I have some Tesla puts. So about roughly, give or take. I mean, it's also super dependent on how those equities are doing that, but about roughly, actually it might even be a little bit more, but about 55 AMC, 30 GME, and then for this public account, the leftover is some DraftKings, some Prague, some Tesla. And if you want, like, I don't think you could see my exact size, but if you want to see what I'm in, you can do that when you sign up for public. So public, I have Voyager pinned to the top of chat, but if you go to public.com/MattKohrs, free trading, free stock, no market makers, no payment for order flow. And then if you follow me, you can actually see the stocks that I'm in. I don't know if it gives you alerts when I buy or not. I don't know how that works. But if you're on public, you can literally just see the things that I'm in. New trading plan, sell high, get back in a lower position, but then don't buy the dip because I'm short selling. Tis per one guy on Twitter. What's going on? Not a hedge fund. Not a hedge fund. I hope I'm honored one day to sit by you in the digital space call again. Save me a seat. Doge is taking a little hit. What is Doge at? What's our other dog base? 26 right now. Hex is finally bouncing back. I've been purposely hiding myself from looking at Hex just because it upsets me, but I'm holding that one. Still diamond handing my Hex. Is public available in Germany? No, it's a US one. I hope they plan to expand, but as of now, it's in the US. But speaking of crypto, if you want to get this, like if you think SHIB's going to rip Bitcoin, Ethereum, if you're worried about inflation, check out Voyager. That's pinned to the top of chat. The code's Matt21. There's Coinbase, there's Gemini, there's various options. There's good brokerages out there for equities. There's good brokerages, exchanges out there for crypto. Just do a little bit of research, see what, I guess, fits your demands the best and go with that one. If no payment for order flow, how does public make its money? Two different methodologies. They have optional tipping. Once again, key emphasis on optional. And they also loan out stock. And they keep the loan payments. But it's very easy to get out of the loaning program. If you don't want your stocks loaned out, then you just say, hey, like it's just like an automated like contact thing. And you're saying, hey, don't loan my stocks. They say, okay. And then your stocks aren't loaned. Mark, go blue. I am super upset that we somehow lost that game. I'm a little bit happy that people thought it was going to be a complete, like, just like dominance. And it wasn't. It was a good game, but I don't know. I said on Saturday that I couldn't be friends with you if you're a Michigan football fan for the day. And I guess we could be friends again now, but I still do find it to be... I just don't know what's going on with our season. Like, I just don't, like what is happening to Penn State football right now? It was a good start, and now we're just, I just don't get it. We shall sit together in the Barbados metaverse. Hey, I'm looking forward to it. Prague calls expired this week. You have any, Matt? Yes, I have some at 550, I believe. But they're worthless. I would need more time, but I still have my Prague shares. Remember, Prague, if it squeezes, that's cool. I'm stoked. But I'm not in Prague for a squeeze play. I think it's a truly undervalued company. You think the new strength and save is enough to start to make a new position? So my favorite airline is not save. I think there's an argument for save. When it comes to airline, I'm not really even seeing much strength. Like I'm still seeing this bear trend. When it comes to airlines, it's very common to split it up in the group of big airlines and small airlines. When it comes to big airlines, Southwest is by far the best. By far. Like just, it has the best fundamentals. Its balance sheet is the best in terms of large airlines. Delta, United kind of tied for 2, and then the worst one is American. I will never buy American. I've flown American. It's fine to fly, but in terms of its company, it came into the pandemic kind of tilted, a lot of debt, and obviously the situation did not get better with COVID. So if we're just looking at like the fundamentals of the company in terms of big airlines, it goes Southwest, Delta and United are both fine, and then American's the worst one. In terms of small airlines, I'm a fan of JetBlue and Alaskan. I do think there is an interesting argument for Spirit, which trades under the ticker SAVE, just because I think as the world returns to normal, there's going to be a high demand for budget travel. So similar to American, Spirit came into COVID already tilted. They own quite a bit of debt. Or they had quite a bit of debt. But like I said, I just feel like it could do well because people are going to be like, hey, I want to fly somewhere and I want to fly somewhere for cheap. So I think there's a special argument for that one. But if you're just looking for like a longer time, like a longer horizon, I'm a fan. JetBlue has a pretty impressive setup, and so does Alaskan. But those are the smaller airlines. Hey, Beefcakes, just started buying NFTs and they're skyrocketing. Thoughts on NFTs, and are you buying them? I like NFTs. I have bought NFTs and I'm not making money on NFTs. I'm successfully losing money. What do you think of TO? I don't know. I don't know if I can legally state who I was speaking with over this weekend. Can I? Okay, let's be a little bit cautious. I don't think I can tell you who I was speaking with this weekend, but I can tell you we were talking about the DTCC. And it's crazy. The DTCC is the clearing corp, and the subsect of DTCC is the NSCC. And this is the best way I can describe it is actually it's very similar to the NFL. The way the NFL, they come together as the commission, but it's all these individual teams and then they run the NFL together. That's basically what the DTCC is. A bunch of brokerages come together and then together they're doing all of the clearing. Like they run when they all come together, all brokerages, they are now the overall entity that does the clearing. It's kind of interesting. It's not like the DTCC is some sort of regulation entity. Not at all. The brokerages come together and they're like, hey, we need someone to handle all of this like clearing and settlement. And then they're like, okay, we're going to do it like this brokerage bought this amount, this one. And like it's all the transferring back and forth. But it is crazy. It's very opaque. It's like almost like a cabal of power. Like all these brokerages came together. They're like, okay, we're going to make this entity to do all of our settlement for us. And then they're settling with each other all on their net positions every single 2 days. That's the settlement cycle. And when I was talking about it, do I want to go on a rant? I don't know. I wanted it to be like a fun Monday morning. All right. Am I going to rant right now? All right, screw it. Here's what you need to know. I don't think I could tell you who told me all this, but this is the best way you could get your mind wrapped around it. Welcome to, I guess, like the fucking US stock market, free market, right? That's what we're told. Invest in the market and that's sick. You're put money in the market and riches will come. Before you know it, you're going to be on that fancy golden bed and someone's going to be dropping grapes into your mouth. All you got to do is get money into the stock market because, hey, that's what you do in America. You get money in the market. It's a free market. You buy equities and they just go up, up and away. You just got to be patient, blah, blah, blah. That's how we're pitched to it. In reality, here's what's happening. I previously, actually, as recently this morning, I showed you that the Federal Reserve said we're the ones who are the risk to the system. Okay, let's think about that. It's not helpful, like, initially to discredit something just because you don't like it. That's actually not how you should be involved with the market. You should take a statement and be like, okay, does this actually hold water? So let's take that statement of the Federal Reserve is saying that meme traders, retail traders, our volatility it's not safe for the market. Well, that's interesting because we're always pitched it. We're saying everyone is, from the time you're young, especially in the US, it's like, no, you get a good job, white picket fence, the nuclear family of 2.4 kids, you get your 401k, you just keep this system going. Every paycheck, you put money in, you put money in, put money in. I know a lot of you are saying, well, I don't even have money to put in, but they don't care about you. They're the government. They don't care about poor people. Obviously, why would they care about poor people? Like, that's not a benefit to them. So they like to think just everything's hunky-dory rosy. So they're saying, hey, get your money in the market. And a lot of people were sitting around in the pandemic and they're like, man, life sucks right now. I'm having issues with bills. I'm having psychological issues not seeing people. Just a lot of problems where they came to the surface level because of us being physically, emotionally, mentally, financially locked down. So a lot of people turn to the market and you're like, hey, I was told you can make money off the market. Let me get into the market. And of course, like you could pepper in a couple of these other interesting narratives, such as the fact of, hey, you might be able to take out a hedge fund. That's fun because Wall Street always gets bailed out. The little guy never gets bailed out. So there were other little aspects to the narrative that I think were enticing to people. But my overall issue, and this is getting into the weeds and I'm going to do my best to explain it, but the system and the protocols to handle certain situations are utter bullshit. They are nothing better than the ramblings of a guy who yells at his camera in a basement. No, like it's of the same level. Trust me. I do one of those professionally. So here's what happens. Get in the market. If you want money, you get in the market. Be a good American. Be a good global citizen. You invest in the market. Wealth will come. Okay. And you do that. You buy stock you want to buy because you have free will. You have autonomy. You make the decisions you want. And a lot of us were on Robinhood because of commission-free trading. Hey, that's a cool concept. I want to trade. Never did because I heard it's expensive. But now I'm told I could trade for free. So I'm going to buy like $10 or something. So more people are getting invested. A lot of people picked a company that sold video games. They liked the narrative of what was going on. They got into it. Fast forward a little bit till the end of January. And one of the brokerages that most people were on, Robinhood, they took away the buy button. And this is where you need to really start understanding the structure of what's going on. So remember, picture this circle, and all around it, you have all these different DTCC members, basically brokerages. You have Robinhood, you have Webull, you have TD, E-Trade, you have market makers. You have all of these people who came together to create this caboodle. So they're there, and this is where it really gets interesting. So all of these people, they trade on net settlement. They are not settling as you make a trade. They wait for the end of the day. And they're like, okay, out of all of my users, we bought X amount, we sold X amount, whatever the net is, they come to this membership thing, the DTCC, more specifically the NSCC, and they say, here's my net, do I need to buy or sell? And then the NSCC is the one actually transacting it. They're like, okay, money goes here, stock goes here. They're the one figuring that all out, but they all come together. And there's a couple things that you're about to notice in this that are particularly insidious, and this is the first one. The fact that we're on net settlement means that they actually have less of a collateral requirement at the NSCC. So the NSCC is like, to every brokerage, they're like, you need to give us this much money based on roughly how much you trade, blah, 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 blah. And the fact that it's on net settlement means that their collateral is less. And why is that particularly insidious? Why is this insidious fact number one? Well, with it being less, they still have that money, so they're just loaning it out to a bank or doing whatever to get interest payments. So because they settle on the net situation, that means they have access to use their other money however they want, and they just use it to generate themselves more money through interest payments. So anyway, that's insidious fact number one. They don't have enough money at the NSCC/DTCC to do instantaneous settlement. They just don't park that much money there. They would rather use their money for something else. And of course, this entire group, they're the ones that make the rules for themselves. So anyway, this is the situation. So many people bought, and remember, because it's net settlement, this is very important. It's net settlement. So let's say you buy AMC right now at 41.61. Let's say you buy GME now at 205. You are owed that at 41, you are owed that at 205. But if we keep running till the end of the day, well, Robinhood, Webull, E-Trade, they have to pony up the cash at whatever the current price is. So if we keep running, they owe it to you at 205, they owe it to you at 41. But if it's trading at 45, they're buying it from someone else off of 45. And that's what happened with Robinhood, was so many people were perpetually buying. The net settlement was an extreme amount of buying, but it ran all day, and it didn't have enough money to cover what it needed to cover, to the tune of $3 billion. It just didn't have enough money sitting there. And what they came to the decision was like, okay, we need to deleverage the risk of the situation by stopping people from buying. So remember, it's on the net situation. And to them, if we're only going one-sided, it's going to help bring it down to where they need to in terms of their exposure. And this is where it gets weird. Because coming back to what the DTCC is, think about the NFL. Like, you have all these teams that come together to form the league. Imagine if there was one particular rule for a team, but none of the other 31 teams actually had to have that rule. So this is kind of what happened with Robinhood, was they made their own rule, like as a team. So let's just say, pick your favorite team. They're like, you know what? Our players aren't going to play with cleats. We're going to play barefoot. And the rest of the league is like, wow, that's stupid, but have fun with it. And this is what's weird to me, is if you're coming together like that, I feel like they should all have the exact same rules. Like if you're watching the NFL, you would think that every single team playing is playing by the same rules, but that is in no way how it's set up. So this particular team, aka Robinhood and various other teams, they made up their own rules so they didn't owe the commission, the DTCC, any more money. They're like, wow, we like really messed up. And that's the insidious thing number 2 is they have the ability to make rules that only impact that particular team. So for example, they got rid of the buy button. In my book, is if you're making a rule and it's because of the collateral and the risk of the situation, everyone should be impacted equally because they're all members of the DTCC. But that's not what happened. To me, it's like, okay, you freeze the trading of stock completely, you figure out all the capital requirements, and then you turn the switch back on. Instead, they made it like very specific to one, which is messed up. And I know other ones did it, but they all handled it differently. And that's what blows my mind is the procedure. Like, that's what blows my mind about the DTCC. I was like, wait, how are there not better rules here that like we're all playing the same game together? It's just not how it plays out. But anyway, I started looking into this and I'm like, okay, so the best analogy I can come up with is if you go to a new country or even a new state, you're abiding by their rules. Let's just say something like traffic, you're driving. It is on you to not break that new area's rules. If I go to a new state, if I drive to whatever, New York, like I have to follow New York trading rules or not trading, driving rules. Like if I'm in my car, that's just how it goes. And that makes a lot of sense. But also with that, when you're doing so, it's easy to look up New York's rules. Like if I wanted to learn all of New York's traffic laws, I could go read all of New York's traffic laws. So to connect this to what I first started off with, we're told to trade in the market. And right now we have the Fed saying that we're the risk to this system. But with that, you would say, okay, well, what are the rules we're actually playing by? And then this is where it comes to the brokerages and the rules set by the DTCC. They're not public. Like in any way. So this risk tolerance of like, oh, like if this happens, this person will owe this money. Like all of their risk measures are secret. So right now we're told that we're the risk. And if you're trading on Robinhood and this thing happens, it's not even like we could have known the rules we were breaking because these rules aren't public. We in nowhere are the DTCC's risk requirements like a public that risk model of like, hey, if this and this happens, like they're going to owe more money and your retail, you should have looked it up. Like even that argument that we should have all looked it up. We should have all read the terms of service. That thing we all agree to, it's not there. So it's kind of like this. Imagine in that scenario that you're driving in a new country, in a new state. Imagine that they have rules and you get pulled over for breaking them, but you don't even know it's a rule and it's not actually posted anywhere. So that's one of the most infuriating things is this argument of things were too volatile. And yes, Robinhood has the I guess, opinion as a business to get like the buy button to take it away. The issue in my book, insidious thing number 3, is the situation in which they would do that is in no way public. Like we're just guessing. Imagine going to a new country or state and that you get pulled over, you pay this fine, and you're like, well, what rule did I break? Like, where is it? And they're like, oh no, that's not public. You can't know what rule you broke. It's all secret, which like to a lot of you, you're like, wow, that sounds like complete and utter bullshit. And that's because it is complete and utter bullshit. The system and the procedures that were followed that led to the event of Robinhood taking away the buy button, by their own rules, it was above board because they're like, yeah, no, we can do it. And then if you're like, okay, well, like I want to be a more informed trader, like please tell me the risk model so I know when to be smart to, excuse me, to know when you could take away the buy button. They're going to say, oh, no, we can't tell you that. So it like that's the game that we're currently playing, which is just fucking mind-numbingly insane. That truly is it. And a lot of people, like, I know I get into the weeds because I have a passion for the market. I like the markets. I don't know why. Ever since I was little, I like numbers. I like patterns. This is something that, like, I'm truly, truly passionate about. And I know some of you come just because I'm the only live streamer, and then other people come because you like to learn about, like, the actual microstructure of the market, at least to the best of my ability in explaining it. And then others of you are like, dude, I could not give a shit about this. Like, my eyes are glossing over, like, win Lambo. But to me, and that's fine. Like, I'm not saying any of those categories are right or wrong. I'm just saying for the particular category of fixing what the systemic issue, like, we almost have to know it to this detail. Like, we have to know it to this degree. We have to understand the market. Like, it doesn't get us anywhere every day to just scream manipulation, manipulation, manipulation. And it definitely doesn't get us anywhere when people are spreading false information about buying dips being the same as shorting, spreading false information about taxes, spreading false information about odd lot theory, false information about convertible bonds, false information about dark pools, it doesn't help us. And like these things, and that's where as a human and as a creator, I fall short, because people, like, they think there's an emotional tie to all this, and I'm just like, oh no, that's wrong. And they're like, what do you mean that's wrong? You can't tell people. You're an ape. Apes never fight. Apes don't fight apes. Apes can't be wrong. If an ape says something and I like how it feels, it must be true. Folks, like, I don't want to be the negative of Nancy. I don't want to be the bearer of bad news. But yeah, some of these things these other influencers have told you, it is wrong. I've gotten things wrong. And that's why I feel like absolute shit. And the very next day when I get something wrong, I say, oh crap, I got this wrong. I need to correct it as fast as I possibly can. Am I perfect? No. I mean, off the top of my head, in the past couple months, I can name like 5 times I've been wrong. Easy peasy lemon squeezy. But the issue is there's people who are wrong, and then they never explain how they're wrong, and they don't care about learning. And that's just, it's absurdly frustrating, especially when we're fighting like some of the most serious institutions of our time. We're fighting the DTCC, the NSCC, the SEC, Wall Street, government, like the Fed, Congress. We're fighting all of them, folks. And then yet people are still like, it's, I think people really don't have, some people, I think a lot of you do, but I think that there's a loud minority of people who don't understand the gravity and the seriousness of the situation of what's currently going on. And they're just sitting here saying, win Lambo. Folks, we're in a paradigm shift right now. We are living through some sort of form of, not really like Occupy Wall Street, but maybe akin to that. I don't know. I wasn't really paying attention during Occupy Wall Street, but we are in a gigantic shift of power and wealth, and we have the opportunity to make things better. But it's also the same odds as like threading a needle. And we have to be very, very precise with our thoughts, actions, and our eventual one opportunity of a shot. We are threading a needle, and we need to pull it off flawlessly. I am just here for super chats. I missed your response earlier on your market outlook. Please repeat. Short-term bullish, but I think there's going to be a correction in the next like 12 to 18 months. You're wrong, Mark, from your redheaded stepchildren at Twitch. What's going on, Easy Merc? Please look into Wonderland. I would love for this community to make stupid money while sit and hang out. You buy time on chain. Huge project. Once again, that is Wonderland. Did anyone catch that social media run? Facebook, Twitter, Snap, and pins are all ran like crazy this morning. Also next coming in a second. Hold, please. Wait, March, didn't the majority of first shorters start pushing GME and AMC in December 2020? Wouldn't their annual interest payments be coming up? They don't pay annually. When you see the cost to borrow fee, that's like the annual rate, but you pay at a much smaller cadence, sometimes daily, sometimes weekly. It depends on your setup with your broker, but it's not like they pay once a year. It's just more of the cost to borrow. When you're seeing that, that's what they would pay. That's like the totality if they were to hold it for the entire year. Anyway, I repeat, what time are you around till today? Were we close to breakthrough on Friday? You thicky bag of chaos. What time am I around till today? The morning stream goes to 11, and then of course we have power hour stream. So anyway, David Barry, coming back to you on T0. To answer yours very specifically, I think the DTCC needs some serious competition, but I just don't know how to actually end up playing out, because the DTCC is created by like all the teams in the league, all the brokerages. They came together to create the DTCC, and it's a wild scenario that we have going. Just here for the oh brother. Do you think MOAS will make crypto taking a hit with hedges liquidating? Plan to wait for AMC to be done putting tendies into ETH. Shout out from Norway. Love you and Trey over here. I appreciate that. Shout out to all my Norway people. MOAS will make crypto take a hit? No. I don't think so. Because right now crypto is roughly a $3 trillion sector. AMC is 21 billion. GME is 15 billion. So you're talking about 36 billion. It's 36 billion relative to 3 trillion. It's a drop in the bucket. Hey Mark, win Lambo and you're wrong. Happy birthday. What's going on? Peter van den Kloot. We were close to a breakthrough on Friday. Oh, for that going viral. Just dumb money being dumb. Been in AMC since January, win Lambo. Great question. I hope freaking today. What's a good level to hop back into Tesla? Looks like support at 600-ish a few months ago. I've mapped out various levels I think it could bounce off of. My first target is 910, this gap fill. From the high on October 22nd. You just play it level to level. 910's one, 855's another. You have 800. So I just keep watching, and like it falls, and then eventually at one of these levels we're going to get some sort of demand. So I just play it from level to level to level. One of these days, and probably not in the near term, but I think one of these days we gap fill back to 1200. SPY selling off a little bit, definitely kind of getting dragged down by Tesla. Tesla is down 5% today. You know what's wild is I have Tesla puts, and I've had Tesla puts, and it's because I've had them for a while that I'm still down. Like Tesla has fallen 5%, and I am still down 25% on my position. Please take that as a learning lesson, because it means that your time and your volatility are extremely important. It is not just the cost of the equity. I got into Tesla around 1,060. It is now at 980. It's dropped $80 since my entry point, and I am down on the position. I bought puts, and that shows you how important volatility and time until expiration truly is. That's a very, very important lesson. Many novice option traders, it's going to be beneficial to you to learn that lesson way earlier rather than later. It's incredibly important. Tesla puts printing 80, 800s, 900s. What's going on, Jacob? I did a bunch of math, and TA in the final equation said win Lambo. Weird. Okay, see you top of power hour. Just one question. Are you scared that if I'm right, I show apes how to trigger MOAS themselves will be deposed? No, not at all. Because we won't. Apes are the product. Apes are the story. Quit mentioning companies are already synonymous. I really need to explain P versus MP to you. That's a computer science thing. P versus MP. It's a millennium like math problem that they're trying to figure out. Did you let the mods out of the basement for the weekend? Did you plan on letting them out for Thanksgiving and Christmas? Yeah, over the weekend. My mods know they get a free 3 minutes every Sunday, like outside of the basement. So they got their normal 3 minutes. Just on Sunday, though. They don't get it Saturday and Sunday. I want to be clear about that. It's just on Sundays they get 3 minutes out. Thanksgiving and Christmas, I don't see a reason to give them any particular time out for that. It'll just stick to the Sunday 3-minute schedule. Maybe check VVNT, good risk reward setup. Sooner the better. Obviously, you know, I've been here forever, not pumping, just sharing Wonderland. I would truly love your thoughts on it. So I don't know much about it off the top of my head, but I'll look into it. VVNT. VVNT. Vint. Super low volume. I mean, its setup isn't too bad. I mean, I'm worried about the gap. Like the fact that I don't love the technical setup and the volume's low probably means it's a no trade for me. All right, I think I'm finally up to date there. Cootery. I think the problem I'm seeing is that everyone thinks every stock is diamond hands. They have a buy plan, but they don't stop loss because they're just trying to diamond hand everything. I agree. Like, not everything is meant to be diamond handed. I think many things actually shouldn't be diamond handed. Rip this COTY play on Tiblio. Check. You did live one day, sold 90%, holding the last 10%. Any thoughts on where it could run to? COTY. Oh, COTY looks strong. At this point, I would be watching 1140 and then 12 would be my next two. And then after 12, I'd be watching 13. 1140, 12, 13 would be like my next three regions of interest on COTY. When's Jackie Daytona here? When Jackie wants to be. It's all up to Jackie. This is the Jackie show. Peered inside the Pandora's box myself this week, so I get how hard it is to tell the difference between my complexity and internet dumpster fires. I think sometimes the dumpster fires are the complex things we need to pay attention to. The complexity of a dumpster fire. Man, GameStop just really not moving, unfortunately. GameStop, where's your volume at? How's IWM selling off, but AMC's having a good day. Q selling off, but AMC having a good day. SPY selling off. Interesting. How's Rivian? Rivian is ripping. Whoa. I have no Rivian position, but now I'm just curious. This thing's almost doubled up. It IPO'd at 78, and we're at 140. I guess we're looking for what, 156? That's crazy. Let me know in chat. Are you guys in AM or Rivian, RIVN? Let me know how many of you like own Rivian right now, whether like any amount of it. I guess it doesn't matter whether it's one or multiple, but this is crazy. How's Lucid doing? Lucid's break even on the day at 44, but Rivian. Wow. I didn't get into it just because I'm not the biggest fan of IPOs, but like the money in Rivian has been nuts. Congrats if you're in it. Remember, have your plan. At what point would you get out? Just define that in terms of risk and reward. What is your trading plan? Why is Tesla down? Probably because Elon is selling stock and he's also fighting with another senator. Waiting for the FOMO to end. Cody, that makes sense to me. Matt, have my baby. I don't think I'm capable of having a baby. Like, I don't think I could carry a baby. Okay, so let's try this. Let's recap. Getting to know Brendan and Matt, shall we? You okay with that? I mean, I think they know quite a bit about me. I think, Brendan, you're the enigma that they're curious about. What is this? Kraken hints at listing Shiba Inu this week. Kraken's product lead, Brian, hinted at Shiba listing this week. I mean, they kind of owe the public it because they promised to do it. And then they're like, nah, never mind. That was a joke. So I really hope that they list it because I think that'll help Sheeb's actually looking strong to me. Watch Sheeb break out of this top trend line at 56 and then look for this horizontal line at 60. So 56, 60, and then look for Sheeb to kind of return to hopefully some crazy rips. Hopefully. Bitcoin taking a bit of a dip, 64.4K, Ethereum 4,600, Solana a hair below 240. So crypto, not, as of this morning, no crazy moves. Hey, Matt, is it better to average up or down? Up? Is it better to average up on stocks instead of down? Most people say better down. What do you think? Oh, it's definitely better to average down because then you own more stock at a cheaper price. So if your longer term thesis is right, that means you have more stock at a cheaper price. But you're also increasing your risk because if you're wrong and it keeps selling, that means that you lose more money. I guess it depends on how you define better or worse, but like most people are going to say you want to average down. I wouldn't know the argument that you should be averaging up. Averaging up sounds like you're chasing. Check out BLZE, just popped on my radar. What's the name is? BLZE. Backblaze. I don't know what this is. Computer paraphernalias. It just started trading like a stock that's only been on the market for 2 and at like probably a half days. Not really my thing. Tesla bouncing now. Rivian is up and away. This action is pretty impressive. AMC currently up 3.94%. We'll call it 4%. GME is up 1.4%. Wow. Sweet. Hang on. Quick coffee break, team. Still long on RLC? Yes, I am. I got into it around $1.36, so it's very easy for me to hold LRC right now. I was at a light, super nice car pulls up next to me, huge screen, fancy dashboard, all bells and whistles. I have a new Jeep, but I was instantly jealous. Is that the nice? It was that nice. The irony. It was a Corolla. Jeremy, whenever you see a Corolla, it doesn't matter how new or old it is, you should be jealous. Corollas are where it's at. Twitter needs to take Elon's account away. Are AMC short positions from below 20 being held? There's no way to know. We just had the average. You don't have the specific ones. Risk reward on Volvo car, in my opinion, up 34% since start. Should I be long on it? What's your thoughts? It looks like it just started going, so I don't really have many thoughts. Like if it just started trading, I mean, I'm a very like chart technical trader, so I just need more data points. And I just don't know much about it. It sounds like the announcement was like somewhat new. If you're up and you're questioning what to do, that's probably a sign you should be locking in your gains. Like this is why you need to have whatever your plan is beforehand. Hey, Matt, as a YouTube influencer, do you think that Lemon Network ICO has potential? I've never heard of Lemon Network. And I'm also I'm a Pico influencer, just to get that out there. All right, here we go, AMC. Perking up. AMC making that run back to 42. Matt Kohrs, the Pico influencer. All right. So AMC gets interesting today at 43.50. That's the wedge breakout, 43.50. I'm a Pico of Gaio. Hot chip at 43.50. We've already done the hot chip. I don't want to like repeat something we've already done. Just like the peas thing and the 10K run. Like it's not fun to just repeat the stuff we've already done. Like if you've seen it once, you've already seen it. So like I don't know. I don't really see the entertainment value in it when we could come up with a even more. Like we could come up with a bigger and a better challenge. Every time I try to diet, you mention Pico on Mondays, and I hopelessly I'm indulging at Moe's. It's fun to watch you. I mean, I feel like I've already like kind of beaten that one though. I did it for a full hour. Like I just sat there and took it for an hour. I feel like I've like completely dominated. Feeling Pico duckish on AMC. What's going on, Cam? GGPI. What's GGPI? GGPI. A gap up going red. Don't like that. Gap up's going red. I get too nervous about the gap fill. Someone said, but you didn't. I definitely was here for like an hour, and it sucked. Thoughts on the GGPI EV SPAC play? I don't like the chart. It might be a good company, but gap ups that go red are generically not a good situation. Can you look at the Sono Group IPO tomorrow? German EV company has solar panels. I mean, I could look into it, but I'm not going to trade it. I mean, I think we all learned our lesson with Coinbase of there's too much excitement surrounding IPOs right now that it seems like the best scenario is just to wait for the excitement to cool off and you can get things at a cheaper price. At this moment in time, the only IPO I'm interested in buying is Starlink. Apes Not a Moon. Everyone wants charts back later. I'll just say if it was 1% chance I was right, doing my utmost to drag you guys out of your echo chamber was something that actually plays outside. Greg's wouldn't want that, right? I think you're scaring people away, Brendan, because like no one knows like what you're actually attempting to do. I think that's what they're trying to say to you is like, dude, what I think they're trying to say to you, dude, what are you saying? I sent you a DM on Instagram of people at Barstool eating the chip and they didn't even last 10 minutes. Respect. I appreciate that. I just did it because of peer pressure. I think peer pressure can lead to like great things in life. And I felt peer pressure from all of you to not give up. Can you belly flop in a cold pool if we hit 46 today? I mean, I think I'd have to like locate a pool. Well, we'll come up with one. I'm long on APPS apps, Digital Turbine. It's been a bit, it's not looking the best right now. At least it's coming up to support, but this stock isn't really trending. It was trending, and then ever since, like, it's just kind of range bound. It seems like a difficult trade. It's probably the best way for me to put it. It's just like a lot of chop up and down. I'm just not seeing nice trends. Thick Pico, how do you draw your bull flag on AMC? Each one, it seems to vary. What's past the endpoint? Okay, so first of all, when you're drawing these, there is not a, like, this is more of an art than anything else. I want to make that very, very clear. Like, there's people will agree with it, people won't. There's not a right or wrong answer, just for everyone to very clearly know. I chose this high, June 18th to September 13th. I use that. And then I use these ones, the lowest one, August 5th to September 30th. That's what I chose to connect it. Some people might be using slightly different ones. Sometimes people go from the bar instead of the wick. With that, I would just say you have to be consistent. Don't use like some bars and then some bodies, like the body as in the opening and the close opposed to the high and the low. I would argue just be consistent. There's some arguments in support of that methodology and arguments against it versus like the body versus the wick. So I would say just be consistent. It's probably the easiest one, but these are the ones I've connected, and thus far it's made a lot of sense to me. So we have 3 separate hits. I connected it at the 2, and then the same thing here. The bottom line I feel much more confident in because we have 1, 2, 3, 4, 5 different touches. So I'm like, okay, I feel very confident in the bottom trend line. The top trend line, I guess we're going to find out. It looks like pretty shortly here. Hey, buddy, we hit 45 today. You have to stream 9 to 4 at least one day this week. Deal. If we hit 45 today, this week, I think I could fit it in. I'm just trying to think of all the like interviews and stuff I'll have to end up doing. I think I should be able to fit that in, but I'll get back to you in the power hour stream if I can like fully commit to that. I think so, though. Wicker bar doesn't matter because these lines aren't even straight. I think you mean they're not horizontal. They're obviously straight. They're not like curved lines. But it's also a pennant. It's not a horizontal line. Thick Pico. I don't know why that's so funny. AMC having a pretty solid day. Trading at 41.81. Oh, GameStop waking up. Sweet. All right. So GameStop price action nice. I would obviously like the volume to return, but both AMC and GME having a solid day. SPY kind of bending back around. The current intraday low for Tesla is 978. AMC, GME looking good. We have a bit of a wedge going on right here. Higher lows, same high. Look for AMC to basically get above 42. But the interesting point, once again, is 43.50. That's this daily chart breakout. Rivian having a good day, up 7.2%, trading just above 139. The SPY kind of trying to bend back around. The Q, same thing. IWM, same thing. So the SPY, Qs, IWM all have a very similar chart today. Thick water challenge. Do you think repurchase will send SNDL to the moon? I think it'll help it, but I don't know if it'll necessarily send it to the moon. When it comes to the Marinara sector, I like Tilray the best. I think some people, when you compare it, you think you can make more money because something is cheaper, but that's not true at all. It's all, think about it like this. And I saw this comparison about AMC and GME of you can make more money off of AMC because it's cheaper, but that's actually not true whatsoever. Let's say, just for the ease of math, that you're investing $1,000. So if you're investing $1,000, I don't know what, you'll roughly get 25 shares of AMC and you'll roughly get 5 shares of GME. It's not your share count that matters. It matters how much money you've invested in total. So in total, you've invested $1,000 and you care about the percentage gain of the stock. It's a mathematical, like, I guess, error to think that just because something's cheaper, you can make more money off of it. If anything, you would argue cheaper is based on market cap, not on price of the stock. So once again, think about it. The easiest way to think about it is how much money do you want to invest? Which one do you think will have a greater percentage return? Don't think about it as in I own more stock so I can make more money. That's just not true. I'm a strong second for the thick water challenge. Hey, Matt, would you ever do a video with Tony De Niro? I don't know who Tony De Niro is, so it would be very dependent. I'd have to like research him. $45 and Matt drinks a whole bottle of sangria live. That would probably end poorly. Could be fun. That could be our next challenge. A bottle of sangria. Hot tub stream at 45. I kind of like that. Those are my favorite two suggestions thus far, either a hot tub stream or a sangria challenge. What else do we have going on? All right, let me quickly check crypto. So SHIB actually looking strong right now, and then some of the major cryptos taking a little bit of a breather. How is Hex looking? Hex had a nice push, but Hex, look at, as soon as it broke to the wedge to the downside, that was not a good situation. So hopefully it can base and go from there. Someone said, why not both? That's a good point. I probably could pull off both. Morning, y'all. Popcorn stocks running PFGC. So PFGC is the ticker of the company that's making popcorn for AMC, which is definitely a unique and impressive play, Kinky Kong, for you to think of that. I like that. I like where your head's at. That's a smart way to think of it. I'm like, okay, we knew this new initiative. That's going to be business for someone. You found the company who it's business for. And I think last week they had earnings. But once again, the ticker for the company making popcorn for AMC is PFGC. Easy one. Hit 45, you stream with the dogs again. I'd have to go to my completely real girlfriend's, like, her parents' house and, like, steal their dogs to pull that off. I do it, like, in the middle of the night. I'm like, hey, don't worry about this. Like, I take the dog. Like, they have no idea it's happening. Like, you don't understand. I have to do this because of Stream. Stream told me to. Do high-frequency traders pay tax on high-frequency trades because retail, if they close a position, they need to pay? Not if you just close. It's on all of your closures, like the net gain and or loss on the net of all your closes. So yeah, high-frequency traders, they're going to pay on their net gains at the end of the year. The net, though, not all the gains. The net gains is like the key thing here from a tax perspective. Wouldn't the psychology of cheaper price be more appealing to the average investor? I think this is the way some choose AMC rather than a percentage play. Psychologically, yes, but it's also like an improper way to think of the market. I think that's why a lot of people picked AMC, because they felt like they missed the boat on GME and they said it was cheaper. But that definition of cheaper is not a good way to like evaluate a company. And it would be if every company had the same amount of stock, but not every company has the same amount of stock. For example, GameStop is currently trading more than Apple right now. Like if you look at Apple, it's what, $140, $150, while GME's $206. That doesn't mean that Apple's cheaper than GameStop. That would be like a very improper breakdown. So psychologically, does it kind of trick people? Yes, but it's also tricking people. Like that's why you have to look at market cap. Market cap is how you like know and evaluate a company. That's what the company's actually worth. So for example, right now, AMC's market cap is $21.5 billion and GameStop is $15.8 billion. You know, like market cap should probably matter to you more in terms of like, is a company under, over, or fairly valued rather than like the value of the stock price. $45 you have to stream from Citadel headquarters. If you're looking to place covered calls with your position, a cheaper stock yields more shares to play with. That would be my motivation. If you're looking to play with covered calls. When it comes to options, yeah. Because like if you're like, let's just say you're exercising a call. Well, it takes less capital to get those 100 shares. But once again, you're focused on the amount of shares. You should be focused on the amount of money you can invest or trade and then the percentage return on that. Okay, for example, what's better here? You buy 10 stock that gives you 1% return, or you buy one stock that gives you a 25% return. You need to focus on the percentage returns of the capital you can invest and or trade, not how many shares you can get. So even with the covered call thing, you're still focused on like the 100. Well, covered calls, I see that because you want 100 so you can sell a call against your position. That's a little bit of a different scenario, I suppose, because you're trying to like engage in like selling calls. So I would say that's a bit of a different one. Look at this. AMC moving, 42.20. 42.20. Crushing it. AMC 42.16, GME 208, IWM coming back around, Tesla deciding what it wants to do, the SPY deciding what it wants to do. It's the matter of having a fixed amount of money. I can buy a lot more of a cheaper stock, and that makes as much or more when it moving less as I have where volume of shares. No, that's not true. That's not true at all. Think about your core investment. Please come back to my example of if you're only able to invest, let's just say, okay, let's say you have $200. That's easy. You have $200 you're about to put into the market. Your option is buy a GameStop share, or let's say AMC's trading at 50. So just for the ease of math, you can buy 4 AMC shares. So your option is 4 AMC or 1 GameStop. That's all the money you have. Which is better? It doesn't make it better that you can own 4 AMC. It doesn't make it better that you can own 1 GameStop. What you care about is the percentage return on that $200. If GameStop runs 5%, but AMC runs 4%, well, GameStop was a better option. But vice versa, it doesn't matter 40 versus 200. You care about the percentage gain on the money you've invested. It really has nothing to do with the amount that you own. It's the money that you've placed into the trade and the percentage return on that. Please do not get bogged down thinking that owning more shares is better. It's just that, I don't know. I need to, I guess, come up with a better analogy, but think about it that way. If you own 1 share of GameStop and 4 shares of AMC, let's just say it's $200 for the ease of math. You've invested $200. It doesn't matter how many shares. You just care about the percentage return on the overall investment. And this is, I don't know. I guess like some people will think I'm like a dick or something, but this isn't like an opinionated thing. This is just math. This is not like, oh, like I could see it that way, but some people argue it the other way. This is literally just pure math. Like you care about the percentage return on your money. Math isn't emotional. It shouldn't be emotional. This is not an opinionated thing. This is how like just math and investing works. So I hope you don't perceive this to be like me attacking you. I'm very confident I'm right in this. And if I'm confusing you, or if maybe we're not on the same page, please let me know. And like, I would love to discuss it and get us all on the same page, because it is an important concept for us to like all understand. Please don't get mean to the people who don't understand it. Hey, it's like a market thing. And like, I know sometimes people don't like the market because it's math. And whenever people start talking about math, your eyes glaze over. Not everyone likes math. And to those people, I don't want the math part of it to be like, screw this, I'm done. Like, I would prefer that like we talk about it, because I truly want all 10,000 of us to like understand the same concepts. I know a lot of you watching right now, you already get it. That's cool. But like we need to elevate the entire ape community together. Like we all need to get on the same page of it. What about buying 5 Cheez-Its, or is it a gallon of honeydew? Oh man. What else do we have? Share counts are irrelevant. If you looked at return on investment ROI on basis of percentage, $200 a SHIB is millions of shares. $200 a GME is one share. Both gain 5% in a day. They both have the same return. Yeah, exactly. I'm just, whatever your unit of ownership is, whether you have many coins, tokens, or shares, you don't care about that. You care about the return on investment, the percentage return on your money invested. It doesn't matter if you own one share of GameStop or whatever, millions and millions of SHIB. It just doesn't matter. Can you pull up the AMC on Ortex? Happily. All right, AMC, they've borrowed $500,000 against it today for a net of 116. Estimated short interest is 16.5%. In terms of GME, they borrowed 129,000 against it today for a net of 82,000, and that puts the estimated short interest at 8.7%. AMC is looking great. GME is looking great. Only positive thing I can think about buying a cheaper stock is flexibility. If the stock runs, you could sell 2 of your 4 shares and let 2 shares if you own one. Yeah, that stock killer, I would agree with you. But also now we have the rise of fractional share trading. So you don't necessarily have to do, like, I would agree with you if we rewound like 3 years. But right now you can just do portions of a share. So even if you wanted to sell half of your one share on GameStop, many brokerages now offer that because of the rise of fractional share trading. Long on Matt's thick math. Hey Matt, it's my 9 months as a space ape. Love the channel. What are your thoughts on VeChain? It's a chart. Do you have any? Yes, I do have VeChain. I'm in VeChain. I'm a fan of VeChain. It hasn't been doing the most lately. Hang on, let me pull this up. It was really exciting back here, then it sold off, and now we're kind of getting like this oblong cup and handle. So I do like the higher lows. Obviously, we're looking for the breakthrough above 18 cents. Would love to see the test of 24. I'm in it. I'm bullish on it. I have it. I plan on holding it. Hi, Sugar. Facebook on the 1 minute looked like the perfect W, then diced out. Can you speculate on why the pattern failed? On why a pattern fails? It's just, you have that. No pattern is going to be ever guaranteed. If you look at the W, pennants, wedges, any of it, you get a general idea of like statistically how it breaks, but nothing in the market is ever 100%. Do I have a position on SHIB? Yes. Long on SHIB. I'm just part of that party. I like the fun. I like the chaos. What other questions do we have? How's my prog doing? I mean, it's up 10% today, but I'm still slightly underwater on my position. My average is closer to $4. What else? You are 100% likely to gain, lose, / stay still. You are 100% guaranteed for something to happen, but something also includes nothing. What else do we have? Thoughts on Ford? Ford is not a heavily shorted stock. Fractional trading, do you think that market makers and brokerages are using the system to screw with share price? Do they have to accumulate a whole share before the price of the stock is hit? If they are screwing with it, I've thought about this. I don't know how I guess like widespread or prevalent they're screwing with it would be. I can't say that they're not through fractional share trading, but is like fractional share trading itself the thing like stymieing price movement? No, not really. Fractional share trading is a very small amount of the overall trading, like a very small amount. So could some funky stuff be going on? Yeah, but is it like a huge issue that we're currently running into? I just don't think so because of the amount of like fractional share trading done within a day. It's just not that high. Long on Rivian, pretty excited to be part of it. Shout out. How are fractional shares not making share slurry. If I have a fraction of a share and it's merged with another, is that share or Frankenstein? I think the way it's executed mechanically is, remember, you never actually own the shares. That's why you can't DRS a fractional share. So what they'll do, the brokerage is the owner, and then they owe you a very fancy IOU. So if you have a fraction of a share, well, that fraction is just split up between someone else who owns the other fraction to get you to the whole integer. That's why you can't DRS a fraction, because you can't DRS a portion of a share. But brokerages, since they're owning the whole pool and then they owe you the IOU, they're just like, it's more of an accounting trick of like, okay, we owe this person 0.4% and then this person 0.6% of a share. What else do we have? What else do we have? All right, so AMC looking great, up 5.25%. GME also looking good, 2.84%. Tesla not looking the best, but it is coming back. It's down 4%. People getting worried about Elon selling. Market kind of flat. We look strong like in pre-market, but now things are kind of calming down. So let's see if things can bend around and get some action for the, I guess, afternoon stream. That is it for this morning stream. I will be back for Power Hour, 3 p.m. Set your reminders, set your alerts. Shout out to everyone. I appreciate you destroying the like button. I appreciate all the new subs. If you haven't dropped a like, if you hit that subscribe button yet, I would appreciate it if you could help me out. That stuff is completely free and it just helps me out with the algorithm. As always, I appreciate all of your support. I will catch you at 3 p.m. Just give me a couple hours and then we'll close out the market together. As always, thank you. And more importantly, from me and Chair, best of luck in the markets.